73% of Americans gave money to charities in 2019. I wonder how many of these people made charitable gifts using after-tax dollars. Today I'll be discussing a way to make charitable donations using highly appreciated assets like real estate, stocks, or ownership shares of a privately held business. Have you ever heard of donor-advised funds? A lot of people have not. It could be best described as a charitable investment account where you contribute highly appreciated assets and receive a tax deduction right then. The assets can be managed by your financial advisor, and you can request which qualified charities you would like to support on an ongoing basis. The charities can vary from time to time. You'll also receive a 5-year carry-forward deduction on gifts that exceed your AGI or adjusted gross income. By gifting these highly appreciated stocks or assets that you have held for more than a year versus selling it and gifting the proceeds right then, you would eliminate capital gains as well as lowering your marginal income tax burden. You might be saying to yourself that a donor-advised fund sounds a lot like a private foundation. They both give a charitable deduction, but a private foundation is its own legal entity. So more than likely, there are separate legal fees to set up and administer on an ongoing basis. Since the donor-advised fund is already set up with the company you choose, the initial cost could be less. Both will have costs associated with running it, but you may not have to get a lawyer involved to set up the donor-advised fund. The donor-advised fund is limited to 30 to 50% of a donor's gross income, where a private foundation has a 20 to 30% limitation. I mentioned this before, but remember, you can make a gift using your required minimum distribution of your IRA and not have to pay taxes on that distribution if it goes to a charity. If you are a business owner, you may want to do some tax planning well in advance of an exit. I'll touch base on this in a future session, but there may be some advantages to changing the tax structure of your business prior to a sale. But it may be advisable not to wait and start this 1 or 2 years before a planned exit. As always, you can visit my website at leejacksonlpl.com or call me at 334-676-2288 or email me at lee.jackson@lpl.com. Thank you, and I look forward to hearing from you.